Bitcoin flushed yesterday, piercing 25,000. We're going to take this purely from a chart and data perspective. Now, again, you guys know I've been generally bearish since we were at 31 to 32,000. I was one of the only people saying, no, it's not going to break out. This is massive resistance here. We're going to actually sell off and come back in. Well, that's exactly what we did. Now, there's a couple things I want to show in this, right? So take a look at this. Here was the Ripple news, the pop, and the reversal right back down. All right, this was your BlackRock news, which, by the way, is the low that we hit yesterday. And we rallied, and then we lost it over here with this move down. Now, over here was your Grayscale news. Up big one day, and then in 2 days, it came right back in. So what we're seeing is this pattern of Bitcoin popping, and then especially Ripple and Grayscale, the good news there, and the chart came right back in. Now, this is where things get even more interesting to me. If you look at the price action, right? So if we look at this price action here, this is just zooming into the chart. This is yesterday, and this is today. What do you guys notice about this? We had a down move, and in 1 day, we reversed it right back to the upside. All right, so the reason why that's catching my attention is just like, and again, this is the key, is you want to be bearish when the charts tell you to be bearish. You want to be bullish when the charts tell you to be bullish. In the short term, this move down here has been reversed. This is the opposite of this. This was a bearish signal. That was a bearish signal. The Ripple move was a bearish signal, and it worked out. This is now a short-term bullish signal on Bitcoin. Now, again, how does it get negated? Well, if we ever take out this low down here, it gets negated, right? If we close below that low. But right now, we've reversed the down move. That puts a short-term low in Bitcoin. And therefore, on a technical basis, you have to switch to a near-term bullish bias. In addition, we know that you hit a double bottom here, right? So we have a classic little pivot low right there, and that was tagged right there. We can draw a trend line right in that vicinity and gives us that double bottom. So again, this is my point, folks. I am neither a bull nor a bear in terms of being a perma-bull or perma-bear. The charts are what tell me what to do. And again, they don't tell me 100%. They tell me probability-wise. So they tell me 70, 80% chance this is what's the coming move on the chart. And again, so many people just don't understand that. They're thinking everything is absolute in the markets. No, it's not. If I see a good setup, it tells me there's a 7 out of 10 chance that it's going to go in the direction I think, and that's great. That's that's Hall of Fame numbers. It still means 3 out of 10 times it's not going to work. You have to know when it's failed, and you have to adjust. So short term, now, by the way, I still think Bitcoin is going lower net over the next couple months, but short term, you can't deny that that is a bullish signal on Bitcoin.
Bitcoin has staged a comeback, surging over 5% and hitting a September high above $26,500 after touching a 3-month low. This milestone is crucial, as the $26,000 level is seen as a significant threshold for traders and analysts. Institutional interest in Bitcoin is soaring, adding to the positive sentiment. Judge Naomi Rao's decision in favor of the Grayscale Bitcoin Trust in its case against the SEC on August 29th paved the way for numerous large institutions to apply for exchange-traded funds, ETFs. Companies like BlackRock and Fidelity Investments are increasingly eyeing Bitcoin. Although their BTC spot ETF approvals faced delays on September 2nd, the $1.5 trillion asset manager Franklin Templeton submitted a spot Bitcoin ETF application to the SEC on September 12th. BlackRock, the world's largest asset manager with over $8.5 trillion in assets under management, plans to use Coinbase for BTC custody in the trust, according to the SEC filing. The SEC will decide on the application by October 16th. Bitcoin's supply on exchanges is shrinking, staying below the 2023 peak observed on May 1st. This signals confidence in Bitcoin's value as traders move it to self-custody. Wallets holding 0.1 BTC reached a record 12 million on September 12th. Over $38.1 million in BTC shorts were liquidated in the past 24 hours, with $26.4 million in shorts liquidated in just 12 hours. With 53% of the futures market still short on Bitcoin, a short squeeze could push prices higher. Despite short-term bullish signs, the Bitcoin Fear and Greed Index reflects ongoing market fear, down over 24 points compared to the previous month. This hints at the balance between optimism and caution in the crypto world. Let's continue our discussion with Gareth Soloway.
Trading is not easy. Swing trading, day trading, even investing. The markets are here to make you doubt yourself. The only way I've gotten over that is by doing trades thousands, tens of thousands of times, and also educating myself, right? The more I learn how charts generally perform and the more I study charts, the more I trust that in general, more often than not, higher probability, they're going to play out a certain way. Therefore, when something goes crazy, I don't freak out over it because I say, listen, probabilities are this. Yeah, 3 times it's not going to work out of 10, but 7 times it will. It's a rule or law of numbers. If you do enough trades and you're batting 70%, you're going to that Hall of Fame with lots of money in your pocket. Now, the US dollar, guys, is continuing to show some amazing stuff here. We are trading in a channel range, right? So again, let me get rid of that there. All right, so essentially what we have in this situation is the US dollar, after topping out here, it fell sharply and we're now trading and we have this trend line to guide us. Now, again, what this is telling me is that the dollar is probably closer to the highs of the chart because, yeah, it could go up a little bit more, maybe 105.50 from 104.88 where it currently sits. But the downside is the most likely candidate over the next 3, 6, 9 weeks, months, whatever you want to call it. Again, this is pattern. Please understand this pattern. This pattern, what I would refer to as a bearish wedge pattern. Down move here, and essentially you have this line and this line. All right? Again, look at the flag. Essentially makes a flag right here, just upside down. There's your stars, etc., stripes, whatever you want to call it. There's your flag pattern. That's where bear and bull flag come into play. Wedge patterns are essentially just kind of consolidation phases within a bigger move. And that's exactly what you're seeing here. Bigger move, here's your consolidation. My guess is eventually we head down here and eventually we break lower. If you think about the U.S. economy, that the Fed is going to keep the pedal to the metal and keep rates higher for longer like it looks like they're going to do, then this makes sense. Eventually the economy breaks, the dollar begins to fall because eventually the Fed has to lower rates and start printing money again. If we think about $1 trillion plus in interest on our debt alone, $1 trillion in credit card debt, defaults skyrocketing, the writing's on the wall. Like literally it's on the wall of what is the outcome here. The outcome here is a recession. It's just a matter of how bad of a recession it will be. And that will likely accompany a weaker dollar because the Fed will have to go back to money printing. Apple, again, going into this announcement, here's your bigger channel on Apple. I think I talked about this yesterday, but just to reiterate, could you go up a little on this announcement today at 1 p.m. Eastern time? The answer is of course. But you could also, in the bigger picture, you're likely headed down here. That's what this channel tells us. Remember, everything I'm showing you is all about probabilities. So you just look at it in honest probability sense, right? So if we clearly see that price has gone up, then down, then up, and again, you're at the high end of this area here, right? What are the probabilities that you get a lot of gain to the upside? I mean, yeah, could it go back up a little bit to back to that high? But ultimately, what this shows us and what we know from parallels is that eventually it comes back down here. Now, again, doesn't mean it can't be up $2 today or $3 today for all we know. Maybe the iPhone, the new thing, is going to be absolutely amazing. But I ultimately think that you probably are headed to the downside.
Over the past 10 years, fervent supporters of digital currency have engaged in intense debates. Is Bitcoin, BTC, designed as peer-to-peer electronic cash as illustrated in Satoshi's groundbreaking white paper? Or does it serve as a digital store of value, similar to gold? Additionally, a central question emerges regarding the primary role of money. Should its capacity as a medium of exchange take precedence over its value preservation attributes? The following Learning and Insights explainer delves into the Austrian School of Economics, shining a spotlight on Carl Menger's On the Origins of Money. Jamie Dimon, chairman and CEO of JP Morgan Chase, has warned that it is a huge mistake to think that the U.S. economy will boom for years given that there are so many risks out there. The executive stressed, "I just think people make a mistake to look at real-time numbers and not look at the future. And the future has quantitative tightening. We've been spending money like drunken sailors around the world." If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.